In this particular audit, we're identifying a qualification that we had on the financial statements of the regulator for the year ended March 31, 2019. I highlight that because qualifications on the financial statements that we audit are indeed very rare. An auditor's report is qualified when there's either a limitation of scope on the auditor's work or when there is a disagreement with management regarding the application, acceptability, or adequacy of the accounting policies. In this case, we did not accept the AER board's view that it did not control I-Corps NFP. Because I-Corps NFP was controlled, in our opinion, AER should have consolidated the financial results of I-Corps NFP for the period in which it was controlled and described I-Corps NFP as a controlled entity. So we highlight that in our annual report. The actual audit opinion is attached to the financial statements. I'm just going to read the relevant section that provides the impact of the qualification, or if you're looking at the financial statements, what that would mean to interpreting the financial results there. Had AER consolidated I-Corps NFP, the AER statement of operations would have an additional I-Corps Energy Services revenue of $1 million, and the AER statement of operations classified as energy regulation would be $2.3 million lower, and the expenses classified as I-Corps Energy Services should be $2.3 million higher. In addition, Schedule 4 to the financial statements, which deals with the related party transactions, does not accurately reflect the nature of the relationship between AER and I-Corps NFP as a controlled entity. So in the audit of the financial statements, and as part of that audit, we identify instances of internal control weaknesses and legislative non-compliance, and those include cash bonuses that were awarded to 2 senior executives breached compensation legislation, long-distance work arrangements lacked proper approvals, succession plans for some senior executives lacked support on how it would benefit AER, and AER failed to calculate and assess taxes on employer subsidized parking, costing AER $1.3 million. In addition, inappropriate approval of senior management expenses were noted, as well as weak expense claim processes were allowed opportunities for inappropriate expenses being claimed.